All right, everyone, welcome to the Hurley Investments Market View commentary for smack dab in the middle of the month, the 14th of July. Glad to be with you tonight. Tonight will be a lot of Q&A, so you guys are going to get asked a lot of questions. I'm looking for a lot of answers. I know that's not typically how it goes when you have a money manager. You're like, wait a second, I hired you to give me the answers. But let's see what you think. Really quickly here, question on the table tonight. I'm going to throw it out there as a poll question. But let me see if I can get it going. Out of curiosity, is the tariff threat real or is it not? Is the tariff threat real or is it not? Kevin, what's the taco trade? Trump always caves, or Trump always chickens out. What do you think? Is it real or is it not? I'm going to give you about 10 more seconds. You should have seen a screen that popped up for you. Are the tariff threats real or are they not? Wow, that's kind of impressive. We are split right down the middle. That is really kind of impressive. We have 5 that say yes, and we have 5 that say no. That's a couple interesting comments. It's real in that Trump can twist it anytime he wants to. It's real that doesn't make sense. It's real that it's part of his plan. That might make sense. I mean, let's face it. The tariff threat is real as a tool to negotiate. So, I guess the question really comes down to it. Is it necessary? No. So if you say no, why is it not necessary? I'm probably asking the wrong question here. But you answered no. Why is it not necessary? No, if activated, it's only a tax on us. So Lee, I 100% disagree with you. Not saying that I'm right, but he instituted tariffs from day one, starting on January 30th. And would you, Lee, please give me an example of something that is a higher cost because of the January tariffs, please? And again, Lee, I could be wrong. So just because I could be wrong, don't hesitate to share. But I'll disagree with you, Lee, in the fact that No, if activated, it's only a tax on us. Tariffs have been activated to the tune of almost $450 billion since January 30th. And there's what's taxed higher? Please bring me up to speed on that. Yeah, so for me, well, actually, I'm going to respond back to that in a second, Lee. Is it necessary? Apparently, the answer is yes. But it is definitely rude as hell. But it's working. So again, the comment that was made, tariffs are a tax on us. And I'm going to go so far as to say that as of right now, that's 100% not true. And my reasoning behind that is over $480 billion collected for lower taxes through tariffs. Inflation is down. Cost of goods bought and sold is down. The only thing you could run down to is, unfortunately, right now, GDP is also down. But there's only one metric that you could bring up right now that would say that we have inflation that is causing a tax to us, which it actually isn't. But there's only one thing that is down right now due to tariffs. And we're going to definitely see that in the next 4 to 6 weeks. Anyone know what that is that's causing that's going down? Interesting comment. Goods manufactured in the U.S. have had tariffs assessed on them, but many seem to ignore the fact. So why is all the hype when we do it to them, right? It's reciprocal. We're reciprocating what they've done to us. But I'm going to take this in the context of how it affects our market. What else is down? What else is down that is 100% that is 100% directly related to tariffs? And we started to see a little bit of it in the last earnings reports. Anyone know? If you don't know, type a question mark in and I'll just say it. What is down other than GDP that positively 100% can be directly related to tariffs? Price of eggs is down, price of milk is down, price of meat is down. Price of computer wafers is down. All right. I don't see anything coming in, so profit margin and companies are also down, directly related to tariffs. They are currently eating the costs. Very interesting. And Lee actually made a comment. Lee made the comment, I don't see most of those down. And Lee, I'm going to go through Southern California for you. Prior to the year in Southern California, I was almost paying $7 for gas in Orange County, in Fountain Valley, Huntington Beach area. And that's closer to $5.60 today. Eggs were $33.99 at the Albertsons on Slater and Brookhurst. It might be on Talbert and Brookhurst. And they're down to like $29 now. Milk was over $4.50. I can buy a thing of milk for $3.75 at the same Albertsons. And if you look averaged across the United States, inflation has been coming down. That's what the PCE, PPI, and the CPI prices are about. So here we are right now with the threat of tariffs. What happened today in our stock market? What happened today in our stock market? Futures were awful, down almost $1. I know because I was driving back from Denver last night. Futures were down, opened up 0.06, went as high as like 0.92 on the S&P. We only opened up like 0.33, maybe 0.32, down 30%. Anyone, what happened to our market today in regards to these new tariffs? Turned up to being up a little bit. We shook off the tariff worry, and we are in a, I'm going to call it unique situation that we have a bullish market over the sell in May and go away until September. I can't explain it. I don't get it. I don't have an answer for you on why it's doing that. I don't know why it's doing it. I truly am confused. But that is the way our market's acting. With that said, yes, we've added some protection for earnings coming up this week and next. We protected Micron, biggest loser today. Because we didn't figure out why it was down so much. Maybe it was extra tariffs to China. I didn't figure it out. But we thought we'd rather overprotect when something's down 5% at the open versus underprotect. Yes, only finished down like 4.52. Finished back up at 119, but Micron did not. Micron was unable to hold the 120 mark where there seems to be a put or a ton of shares to be bought right there. So we did the best we could. But again, we are once again in an interesting market where truly we haven't fought a true tariff war to this extent since the, what, I guess you could say the 1930s. Yes, we've had tariff restrictions, but a true tariff war, tariffs on everything and everybody, we go back a ways in history to understand that. So for me, this is like number 46 or 47. First time it's happened in my lifetime. First time it's happened since 2020, 2000 actually, I guess, not 2000, since 2000. We are in things that have never happened for 50, 60, 70, 95 years. All right, one last thing I wanted to bring up. I think it's pretty important for our market and understanding our market and where we might be at. So we know we never fight the Fed. Okay, let me just put it this way. There are no experts right now. RCB, start of the year, S&P 500 had a target price, of 6,600. February, March, they lowered it to 5,500. April, they increased it to 5,750. Last night, they increased it back up to 6,200. And probably they will move it back to 6,600 for the end of the year. These are the experts. RCB is one of the big ones like Moody's and Piper Jaffray, Vanguard, Goldman Sachs. Their projections are gold. And in 7.5 months, right? 6.5 months. January, February, March, April, May, June, July. So 6.5 months, they have changed the S&P target price 4 times. which you can give them the pass and say, well, a lot's happened and they had to rejigger their numbers. We've had tariffs, we've had Trump, we've had this, we've had that. I get it. There are times when you're going to have to rejigger your numbers, right? But if you're changing your mind every 6 weeks, how important is a target price that you even have to announce it? My bet, it'll go to 64.50, and they can't choose 6,600 because that would say, hey, we should have just left it alone. It'll be like 67 or 6,800. And it's really interesting because I just want to make this comment. And I agree with it 100%. For you that have taken some of the same, if not the same, education in the stock market that I have, you are just as much as an expert as the TV commentaries. You are just as much expert as the nobodies that are writing newsletters. You know just as much as Jim Cramer, the Nigerian brothers. We all have the same information. Yes, they might get a little bit more. Yes, that they might have, I don't know, a little more insights because they talk to more of the upper ups. But you guys can make just as much of an educated decision as these numbskulls that they have on TV. Nothing has changed. We all went through our target pricing in January. I gave you guys a spreadsheet, target pricing for this, target pricing for that. I might bring it up next week again so we can look at it. I looked at it here recently, probably 2.5, 3 weeks ago. It's amazing how accurate we are. It's amazing how the direction that we're going seems to be in place. It was amazing the end of last year, just how close we were to end of the year pricing. There were about 12 that we were off by less than 1%. I want you guys to start giving yourself some credit for the education you've paid for the experience that you have. Don't think that experts have it figured out. It's their best educated guess. And after you've been with us for a while, after the education that you guys have paid for, your best educated guess is just as good as theirs, if not sometimes better. Last little comment. Have you taken a look at your portfolios. You guys give me some comments. How are you doing this year? Yes, that's a baited question. Up 30%. And I will write that one. Made what we missed last year up and then some. Wrong sum. Thank you. You're doing very well. What else? Any other comments? Yes. That's a very interesting one. You're correct. For the year, the market took me way down and way up. That's a great way to say it. That's 100% correct. We had a couple of our positions that lost over 50% of their value. Thank you for stating it that way. I really, that you cannot find a better way to state it. There's a great example. Let me get this out just a little bit more. We are kind of talking year to date. Micron. Hovering around the 114, 113, all the way down to 61. And this year, the highs are 110 down to 61, lost 45% of its value. Awful. NVIDIA. Highs of 43, back down to $86.61. Sorry, highs of 153.11 down to 86. Roughly a 45% loss. Over nothing, may I add. That's the frustrating part. Over nothing. Apple. Up in that 260 range, probably closer to 252. Went down to 168.99. 35% loss. Ford looks pretty good. Ford wasn't that bad. Let's do Bank of America. $46 down to 32. Another 40% loss. Good news? Yeah, no one lost 40% of their portfolio. The good news is, thank goodness we were collar trading and adding shares. The good news is, it came back. Welcome to the process of collar trading. Our process of collar trading protected from 40 to, I think the worst was 54%. Losses in your account. We added shares. So today, the accounts look much better. Personally speaking, and this is just for me, this is not coming from anyone that's typed anything in. For me, that beats the hell out of being told, don't worry, it's going to come back. I want to get something out of the downward movements in our stock market. I don't want to take stock market risk. I want to take stock risk. They're different. I'm not interested in saying diversification solves downward markets, because on every market crash, diversification really hasn't done jack crap. I appreciate your comments. Up 30%, made what we missed up last week, then some. You're doing very well. And I really appreciate the market took me way down and way up again. All of those, 100% accurate. Welcome to our process of color trading. Are there any questions anyone wants to ask me right now before I go into some of the other things I have planned for today? Are there any questions or any comments that anyone would like to make right now? I'll give you a second. Earnings season is coming up. Well, I've done some research on it. Yes, I messed up last week. Apparently, I did the wrong weeks for earnings. I'm glad Keith caught them. But for us this week, kind of coming up, I guess you could say, JP Morgan tomorrow, Bank of America tomorrow, GE and Netflix on Thursday. The following week, we're going to have Verizon, Lockheed Martin, Chubb, Tesla. So we're going to have some earnings coming up. Just as a heads up, next week I will be on a family vacation. One of those that, yes, I'm still watching the market, but if you do have any questions or concerns, we're going to direct those questions and concerns to Keith. I don't see any questions coming up, so yes. Earnings starts this week. JP Morgan, Bank of America, JP Morgan tomorrow before the market opens, Bank of America on Wednesday, Alcoa reports on Wednesday, which is the traditional. But very, very excited for earnings coming up here. Reason why? Earnings beats coming, but what's next? I really enjoy the big picture. And this is another guy that just calls it as it is. Hey, a lower earnings bar sets the stage for a big Q2 earnings beats. He's 100% correct. The market overreacted from tariffs. People overreacted from tariffs. People can't run their own calculations for tariffs. So our market is set for something, again, I don't understand, but shocking. Their bar for earnings is ridiculously low. That is going to make for a push higher in our summer. When it's supposed to be a sell man go away. When I told you, my thought process is we were most likely going to be stagnant. Well, Kevin, you're wrong. May, where we are now, that's not stagnant. I may have called it right for about 5 weeks, maybe 6 weeks. We were a little stagnant, but we're going higher. The fact that we are, boy, the fact that some of the earnings are so ridiculously low, I don't understand why analysts are important again. But we're talking about something that's interesting, and you're going to start hearing this word more and more. Valuation. The market valuation is overpriced. Let me go ahead and valuations, or the term, will be thrown around because people keep doing the same thing over and over again, expecting the same results. I know I thought I was going to say different results. Expecting the same results. Let's do a quick check here because I find this interesting. This is one of my things though, right? S&P 500 historical. You can see what I keep, what I go for. S&P 500 historical valuations. Serial valuation average. $10.3 since 1957. Interesting because we just were talking about 1951. S&P P ratio is at 28.79. Yes, I think that's high. The price range, the valuation is high. So the PE is 28. When historically it sits around 17 to 19. Or 15 to 16 if you go back to 1950, 1951. Can someone tell me what's wrong with the historical S&P 500 valuation? Is there anyone that can tell me what's wrong with the historical S&P 500 valuation? And there's a list. Someone here tell me what is wrong with our historical S&P 500 valuation? Ooh, two of you just typed something in. I'm going to hold off on reading both of those. In fact, let me call a couple people out here. Mary, what's wrong with our historical valuation? Bill Brandner. Let's go to David. Lee, how about you? Maud, how about you? Stuart, how about you? What's wrong with our historical average valuations that, again, all these experts keep referencing that we're way high, 28. Our average is 15 to 19, 15 to 16. We're almost double. Yes, I'll agree. How about progress? I like that one. What else? Oh, that's an awesome one. Value of the dollar. It's not constant. In fact, it's a lot weaker, no longer back to back by gold. Value of the dollar is weaker than it has been historically in the 1950s, which makes selling all of our stuff overseas cheaper. Love it. Great answer. Thank you, Lee. Innovation. Yes. Look at all the innovations from the 1950s today. The progress in the materials, the manufacturing. Love it. That was a great answer. What else? Yes. $1 trillion companies. Tech advancements. For God's sakes, it's no longer apples to apples. My opinion, you should be looking at the valuations from the 2000s to the 25, the last 25 years. Cold wars with Russia, the ridiculous oil prices through the 70s, of ridiculous inflation through the 80s. It's no longer apples to apples. If you want to compare things over the lifetime, let me use an example as a person. You're an idiot if you're trying to use the physical performance of an 80 or 90-year-old compared to what he did in his 20s or his 30s or his 40s or his 50s. When we're going back 75 years, how can you compare the physical performance of a 75-year-old when they were in their 20s, the 30s? How about the roaring 60s, right? It's not an apples to apples calculation. The difference is, yes, our market is twice as expensive. And let me type that in. Yes, our market is twice as expensive as the 1950s through 70s. 100%. Look at all the innovation. Look at the change in materials that we're building planes with and cars with. Look at all the technology in our cars. We no longer, I mean, we're comparing a freaking rotary phone to a smartphone and wondering why their prices aren't the same. I'm pretty sure a smartphone is 20 times More expensive than a rotary phone because it can do 200 more things than a rotary phone could have. My wife teased me. We were trying to call one of our kids, and I'm like, pick up the phone. And she laughed at me and she's like, what? And she kind of picked up like the old phone that sat on the cradle, right? Are they going to pick up the phone and start dialing in a circle the phone number? I'm like, no, they're going to pick up their phone. They're going to push a button. Think of a 50s car, a Ford truck compared to a Ford truck today. Better gas mileage, off-roading, four-wheel drive, radio, air conditioning, power windows, power doors. Heck, my Ford truck massages my back in the seat when I'm driving back home from Denver overnight. I'm sure my car is 10 times, and I don't know, I'm making this up. I don't have how much a Ford truck cost in the 1950s. I would dare say it's probably 10 times or more expensive. And I think it does 100 things better. I'm shocked that these TV personalities are still referencing historical valuations with S&P 500 and haven't given credit to progress, valuation, innovation, trillion-dollar companies, tech advancements. It's okay. The new normal for our market should probably be a 25 to 28 PE ratio, which means all the crap that these people are saying don't matter. Where do I think our markets are ending? I wrote this last night. I would have said lower, even though we're higher today. I'm going to change it. I think we're going higher. When I saw all the estimates, the bar is set really low for Q2 earnings. We're still bullish. We came off of being overbought, though. Just that's not helping me. How do I go back? I need to go back. I need to undo. How do I undo the fact I just pulled that over here? Where's my undo? I'm missing it. We'll cut it and we'll just put it back. We're no longer slightly overbought. We're still bullish. S&P 500, I'd keep it the same, bullish, slightly overbought. NASDAQ, bullish, slightly overbought. Going on 2 weeks in a row here. Where will our market end July? I'm going big, I'm going bold. Let's go up 2%. Something markets typically don't do in summer. But we're not selling in May and going away. We're following the trend. Earnings, I went through most of those. Those are the same ones that were listed last week. I now have them in the correct week. I did not change the economic reports. So let me change those for you really quickly. Tomorrow's kind of a big day. For those of you that think I'm off my rocker, CPI, core CPI, and Empire Manufacturing. Wednesday, We have obviously the NBA, but we have PPI. We have core PPI. We have capacity, utilization, and we have industrial production numbers. Big numbers to see if we're going to keep running through the summer, producing and making more, or if we're in trouble. Initial claims, we have import and export numbers coming in. I find those really interesting. Retail sales and retail X transportation. Amazon's numbers for their Amazon Prime Day, I believe, came in 40% lower. We have the Philly Fed. We have business inventories. We have an NAHB housing market index. We have the net tick flows, net long-term tick flows, and then on Friday, kind of a boring day, the building permits, housing markets, housing starts, excuse me, and the Michigan sentiment. Dig into these numbers. Go to briefing.com. See what they mean. Really, briefing.com has an excellent, a really excellent calendars, economic this week. They've got a really excellent understanding of, hey, is Kevin right? Let's go to core PPI. Let's take a look and see if the numbers are coming down. If they're coming down year over year. How bad the inflation hurt us. It's really interesting to go through and read where numbers are coming in at, why they're coming in at certain places. Food and energy. I mean, really dig into the nuts and bolts so you don't feel anything. So you have the raw data, the real numbers right there to explain what you think and if it adds up. It's really neat to go through briefing.com and learn. I also, it's funny because someone just questioned me on the CPI. Yes, they're obviously blips. Go through and look at it. Justify it for yourself. Look how things are coming down. Motor fuel. Someone asked me, why are you not in oil and energy? Look at how the price of motor fuel. Open up the spigots. He's flooding the market to make it lower. Energy prices coming down. Trump and the administration is forcing energy prices lower. If that's happening, I don't want to be in that area. Kind of interesting to look at to see again if you agree with it or not. But those are the raw numbers. Don't think, be educated with numbers. Know what's going on. Very interesting report on Disney. I do think Disney can get back up to that 200s. Probably not this year, but it'll continue to head higher for the rest of the year. I love this article because I switched it. Because it gives some numbers to justify Disney's price going higher. For those that maybe missed it last week, NVIDIA is our first $4 trillion company. Doesn't seem like just 7 or 8 years ago, our first $1 trillion company was something other than ExxonMobil. And now we're going to have a 4 and probably a $5 trillion company. Pretty fun to notice how the market cap keeps increasing, yet we feel, the market's overpriced because the standard valuation is 15 to 17 future price per earnings. With the $4 trillion company, I gotta believe this is 10 times what the whole stock market was way back in the 50s, averaging all this out. Amazon Web Services are building equipment to cool NVIDIA's GPUs. Guys, we are in an AI boom right now. A boom doesn't occur for 6 months. AI is going to progress forward for a year. There is no reason to think that the AI boom has come and gone. If you believe in artificial intelligence, it will be a multi-year progress. It's going to take a while for AI companies to lose their valuation. For those that missed it, a week and a half ago, Trump says 50% tariff on copper imports. I have some information on that. The tariff windfall for the surprise budget surplus. Yet it's been a surprise for like 3 months in a row. I wonder who wrote this that thinks it's a surprise now. Well, we had a deficit in May. The deficit was half of what you thought it was. Markets are telling you not to worry with a steep drop in volatility. Should you listen? I found a very interesting article. I'm letting you guys make the decision for yourself. I have an article here, which I found was very interesting. These are America's 10 weakest state economies, or that will be most at risk in a recession. I think it might be fun to go through them. Number 10 is Oregon. Number 9 is West Virginia. Number 8 is North Dakota. Number 7 is Illinois. Number 6 is Rhode Island. Number 5 is New Mexico. Number 4 is Louisiana. Number 3 is Kansas. Number 2 is Mississippi. And I would have thought California would be number 1, but it's actually Alaska. I then found the alternate article a couple days later, the reverse article, I guess. 10 strongest state economies best prepared for a recession. And again, please read through it and enjoy it. South Carolina was number 10. Georgia was number 9. Utah, number 8. We're going to do better than 42 other states per this article in regards to dealing with a recession in the United States. So maybe that's telling me that what I see is obviously significantly different than what someone in California might see, or what you're seeing, Lee. Idaho, number 7. Best handle. Washington, number 6. Number 5 is New York. I call bullcrap. Number 4 is Delaware. Number 3 is North Carolina. Number 2 is Texas. I strongly agree with that one. Number 1 was Florida. I don't know how I feel about that one, but please read through the numbers. Make the decisions for yourselves. Any questions for tonight? Sorry, I didn't realize I'd go that long. When I miss a week, I guess I'm full of a lot of hot air. Any questions that you guys have for me tonight? I'm sorry I've gone over the hour. I usually like to go only 45 minutes. Any questions you guys have for me? Lee, any comments maybe I can make in regards to your comments? Other than saying, well, yeah, we probably see things a little bit differently because My state, according to one individual that wrote an article, thinks it can maybe better handle recession than another state. But any questions, guys? If not, I'm going to work on getting this published tomorrow so you can watch the video and see what we're seeing. We're looking at a pretty good summer so far. Definitely wouldn't want to be in a 60-40 bond fund mix. I'm trying to stall so if you guys have any questions, I can get them answered. So that's an interesting question. So what are you changing for summer? And nothing. We're sticking with what's moving. We're still seeing 80% of the S&P 500 returns, which that's not true anymore because it's closer to 60. But we're still seeing 63 or 4 or 5. I don't have the exact number. Percent of the S&P 500 returns coming from the Magnificent Seven. That's maybe broadening out to the Magnificent 12 or 13. The broader market is coming up, but we're still staying with our winners until they're no longer winners. Great question. Thank you, Dave. Any other questions? Okay. If not, guys, I appreciate being with me tonight. I will be looking forward to talking to you next Monday night from Flaming Gorge in Dutch John, Utah. Next week, for the majority of the week, I will be gone in Flaming Gorge. We're taking the kids rafting down the Green River, and we're taking them surfing and wakeboarding and all that kind of stuff. But okay, no one else come through, guys. Have a wonderful evening. I appreciate you guys letting me talk with you tonight. Please don't hesitate. Any questions or concerns, zip me an email, khurley@hurleyinvestments.com. I always would love to answer, debate, talk. These are your portfolios. You're always welcome to please bring your input. Bring your input, and if there's something that's worrying you, let's make sure we talk it out, and let's see if we can't get on the same page. Guys, have a wonderful evening. Look forward to seeing you next Monday from Flaming Gorge, Utah. Dutch John is the city nearby. Take care, and I'll talk to you then. Bye-bye.